Good afternoon. Welcome to OptionsTender. It is Tuesday, pre-FOMC day, December 17th, 2024. Welcome, traders. We're going to go through the 1929 crash, just the initial. We just want to show that since I was showing how larger degree or recessionary corrections happen. The degree, and give you an illustration on the daily time frame. So while we're waiting for FOMC to happen, I think this is a good time to do it. We're doing this intraday about 12:30 p.m. Eastern Standard Time. If you're interested in getting these videos intraday, then consider becoming a 99-cent supporter. Otherwise, you'll get these videos for free at 4 p.m. No big deal, right? So we're going to start off with SPX. Just a reminder of where we are and what we're looking at in a larger picture. And then we'll go to the daily on SPY, and then we'll go around the horn on 65. We're not going to spend too much time on the higher time frames. Okay, so we're looking back. First of all, this is the 2029 trend line starting here at the 29th, or the 29th, excuse me, 1929, 2000. And then we can't really see it behind this box here. 2024, we're right at that peak in confluence with this channel as well. So we show that every single day. We're there, folks. And although I do now think that the Elliot wave picture is much more clear, and that the election was a wave 1 instead of a wave 5, and I'll show you that again in detail on the 65. Now that leaves one more high available, plus we have a triangle consolidation. So lots of good information coming up here, okay? So make sure you stick around or play the video at about 1.5 or 1.25 speed so you can get a lot more information fast. Might sound like a little mouse, but that's okay. It's good information anyway. So back here in 2029, the initial, now this isn't going to be apples to apples. I'm just trying to catch the initial wave. So 2000 is much more likely, in my opinion, where we start off with a initial wave down there and get a 140-day correction before continuing to the downside, because we don't have any downside momentum here. It's different because the impulse wave for this is an ABC. We have a flat pattern. So we don't have the momentum that we do on wave C. So I think that's less likely to get such a large move at once. Now, because we're on a larger degree, possibly correcting the 1929, you know, I could be wrong. But back here in 1929, I had to do the first move here because the information is very choppy on the daily, so I did it I did it on the weekly, but you can see it here. We have about 53 days for its initial move, and that's a 44% correction. And that wasn't, you know, the heaviest part of it. That was just initially. Well, do I think that's what we're looking for? Not really. Keep an open mind though. Anything can happen. Here it looks much, much smaller, but that's what we're talking about with the initial 14% move within, let's see here, I think it was 16 trading days. 25 days here, this initial move for about 14%. Okay. I think it was 16. I did it on the daily. I did it on the weekly again. So I think there was 16 bars, but it doesn't matter. You get the point. 14% on the initial move. And then here on its initial leg here, that's a 1, much longer time frame. So it's not a real comparison here. But again, this is a wave 1 out of 5, right? So that's its initial move, 20%. 148 days. Corona crash, we went through that. 10 days, about 16% for its initial move down before getting a larger bounce. So what does that look like on SPY? I don't have all of them tracked here, but I just want to give you kind of the angle at which things were happening. And I think all of those they're very, very similar. Okay, so while we're zoomed out, this is the initial move from 1929. Look how straight down that slope is. Steep slope, insane. 53 days, 44% would take us to the lows of 2022. Wow. Now just zooming in, we already had these here. This one here is the Corona crash. 6 days, 7 days, 6 bars, so 6 trading days, because it's the daily time frame. And we're looking at 15.5% retracement. It's just so steep here. And then the more likely situation, which was, okay, see, that makes sense. That's 24 days. We had 25 on the other one, but 24 days, 16 trading days to the downside, just a little shy of 14%. That's what that would look like, which would take us down to about 525. All right, so that's what we have in common. If I plotted, maybe I'll plot the other ones as well, just so you can get the slope of these moves. We're gonna be able to tell when this thing starts happening. So right here, the top of the wedge from the high in July, and then the high here on from the election, post-election move in November, and then our high here. Okay, so I think it's fair to put these initial starts here on those just one more move higher. I think we're going to get a nice spike tomorrow with the FOMC, and I'll show you why I think that on the lower time frame. Takes us to the top here about about 612. And then, I mean, this is still valid too. If price wants to go up to 614 or so, I think that's less likely, but let's say we just rip. Then we have some confluence between 3 different trend lines about 620. And I did hedge today to the upside, but that's a real big move that I just don't think is going to happen. There's got to be a lot of things that happen. NVIDIA really has to take over. Tesla probably continues parabolic, and the IWM and DIA really get like a 3-4% move on FOMC, for example, to really get us up here. And then we can't have a reversal in the Qs at that point yet. Okay. Everything will have to be up for this to happen. So we'll see what happens when we get to this point right up here, about 612. Let's go down to the 60. No. Before we go, we have time and price. Time and price, we have 12.19. So FOMC is going to be coming up here on the 18th. I think our high comes on the 19th. I think that's our time and price relationship that will give us our top right here on the 19th. Okay, so that's this. We have a couple relationships there. And then if anything kind of really sharp starts moving, that's just an example. 520 is down there. We'll see. I don't want to put any targets because we don't have any information on where that's going. We'll have to let price tell us when we start to get some downside market structure on the lower time frames. We'll be able to measure out what those moves can look like. 65. The 65-minute, I'm just going to focus on this last move here. So this move, now let me jump back over to what we've been looking at. This is the structure that we've been looking at. This is an ending diagonal. And so you have 3 wave moves in each wave, and there's 5 of them. ABC for 1, ABC for 2, ABC for 3, ABC for 4, and now after looking at everything and realizing what had happened during the election, we potentially could have completed up here, but I think that was an A, 3-wave move down for B, and now we're looking for a 5-wave move up here for C, and into, potentially, again, into resistance. And if it goes parabolic, this move, we have 620 up here at the trend line if price wants to get there. So that's why we're hedging, because the potential for just this sharp move from FOMC is possible. Okay? And yes, I will be shorting back into this. I'm very confident in this wave count now. It all makes sense. I was having a hard time getting an ABC in here. I thought that could have been it here, but that was a larger degree A with an A, B, C. So we had possibly a zigzag or some sort of formation there into an A, now a B, and this is incomplete at this point. Okay, now we can go to 65. And how convenient just to push all of us bears out one last time. So here's the final wave structure we're looking at. And it's also, in a traditional sense, it's a bearish rising wedge. So we have our initial wave 1, which forms a wedge, 2, 3, wave 4 as a triangle, and then one more push into wave 5. And then with this being a triangle, you get this measured move here. So just in a traditional sense, you could just take a measured move from the bottom of the triangle to the top, just a rough estimate, and from the breakout point. So that will take us to about 614 or so. And so that, that in itself brings us just above this target area. I have this target area from the Fibonacci's, and so we do have the options expected move up here, so we might get a little pause at the 611 or 612 area. But this is our zone that we're looking for, right? So again, this is over here is just potentially what a move could look like. 14% move. I have 22 days there. 25 days, I'll move it over there. And that takes us all the way down to about 525. It's just a huge move. I'm not sure that's going to happen, but if it plays out just like any other major recession plus more, that's what we'll be faced with, okay? In some sort of fashion. What else? So let's go over to the other board. Now we have this new count in here. My final count. My final answer, folks. All right, we had wave 3 and 4 in with this ABC correction, and now we're looking at 1, 2, 3, 4, and 5 for the A. ABC correction for a B, and now a 1, 2, push to wave 3, and wave 4 is the triangle, and now wave 5 should be happening. So a triangle is an A, B, C, D, E complete here, and now we should be looking for an impulse wave to the upside. So we get some of our targets from here. So this 1-2 correction here wave 1 to wave 2. The correction brings us to the 162, about 610 here. So that's our initial main target, but clearly on the lower time frames, we have more targets. And I do believe we have this confluence at 611, 610. We'll probably get a little pause there, but I think we're more likely to reach that 613 going into Friday, Thursday, the 19th. Probably make a high, maybe gap up, and then crap after that. And you see the confluence with our last and final target there, along with the measured move, would make more sense. And also the top of the wedge as well is in this range. So that's what I have for you there. Let's just zoom through a couple of the other names. And we went in a lot more detail in the Discord and also with the individual analysis with Tesla. I think Tesla is likely to reverse first, kind of leading the market. In a sense, NVIDIA already had led the market to the downside. I think everything else follows after that. So next would be Tesla, and we're getting a bounce in NVIDIA. It was down as much as, I believe, 3% today, and I think these rolls are going to reverse. That's what we've been talking about over and over, Tesla versus NVIDIA. And now I think NVIDIA will take over to the upside. Tesla will be able to reverse, and then all the other ones will do what they want to do to help the market go up this last time. But I think mostly NVIDIA, and we'll jump over there in just a second to the small caps. This has a wedge in the larger wedge. So has it topped here? It's very possible. Maybe we get a lower high starting here. Maybe we get one more high. I don't have that answer going into tomorrow, but I think most of the energy has been taken out of this one, the Qs. And I think really we need to focus on, for this next move to the upside, right into this former gap support. We have positive divergence. And here, sorry, I got to save that with the right board. I have to change that all the time. Positive divergence with this last move here. I think this screams to the upside or just gets a lower high. But either way, it's going to be a large move for the small caps. Same with DIA, and that would these would also include the banks. So the banks are part of the Dow. There's some big names in there: Goldman Sachs and JP Morgan Chase. And so I think the banks have been really kind of devastated here and are going to look for a nice, at minimum, a bounce where this is an impulse wave. And see some big moves there along with NVIDIA. And I think that could carry the market to where it needs to go. And then the others should be weak. The other names should be weak. And eventually, at the end of this bounce, the end of the move, from NVIDIA bounce, DIA, IWM, then everything will be dragged and go in tandem. And that's where big moves really start to happen. Look at SMH, just peek at that. Now, SMH isn't really cooperating very much with NVIDIA. They're kind of offset. But what I do see here is a possible lower high here for SMH, because we had our A, B, C correction here already, broke down from it. Back testing, do we get one more high? Maybe that makes sense. I'm not sure. But I see a 5-wave ending diagonal here for this A, B, and C. The VIX. The VIX is having a big move right now. it broke out from both of these wedges and now is back testing this larger wedge. And I mean, I could probably draw it different ways where it's, you know, different points up here. So this probably makes the most sense right at this point. It's so volatile. The volatility is volatile. So we're right back at the options expected move. And we'll probably just continue to either consolidate and then move at this point. But we're breaking out. This is really close to making a move. We have the 200 moving average here. We're into resistance from the 1550. Move that over. And then let's see what the daily time frame looks like. Okay, so we're almost up into the 200. We're above the 8 and the 20, so we're in a bullish stance. Does this come down a bit to test these back here while the market goes a little bit higher? I think that's possible. And then a big move after that. But this next move, you guys, we're eventually gonna make new highs. It's bound to happen. It's coming. So be ready. One more high in the market. Let's check it out. And if any shenanigans happen, you know, that things just start cracking to the downside, that's fine. No big deal because we're already positioned to the downside anyway. And I'll just give you the look here. The reason why I think this will not break down anymore, as this is a triangle, we're getting a 5-wave move here. I don't think it's possible to have an ending diagonal within an ending diagonal. So we have a 1, 2, 3. Wave 4 should not cross wave 1. So I don't think this is going to break down anymore if this wave count is correct before heading higher. Okay, so that's just a little bit more reassurance that this wave 4 correction is to be shallow and it's not to cross over wave 1. All right, I'm going to end it on that. Thanks for joining us here. Wait. One last, if you haven't checked out yet, reiterate, we're probably going to go get a little spike, one last spike here into the 78.6 retracement from this impulse wave down going into FOMC, and then we'll get a sharp reversal. So this will tell us right now we're in sell the small caps, buy tech, and that's going to reverse with the 10-year yield. It's going to be sell tech, buy small caps. Okay? And by buy small caps, it doesn't mean that the small caps have to go to new highs. It just means relative strength in that sector compared to, in other words, tech is going to lead the way down. All right. Thanks for joining us here at OptionsTender. Have a wonderful day. We'll talk to you tomorrow.